Cool. All right. Well, now we get to move in directly into the VC panel component of the day, which I know there have been a lot of people asking questions of me, saying, "What are you going to ask the venture capitalists?" Everyone is kind of really wants to know what's on your mind. So we're just going to have a real kind of open, frank discussion on things you're looking at, what you look for in investments, and maybe some of the trends that you're seeing here in 2015 and beyond. But just kind of building off the pitches here, I think a lot of the entrepreneurs in the crowd might want to know, like, what were you listening for there? What resonates with you in a really good pitch? And I could tell you were going to pick Ed Republic as the winner because you were asking more questions than you did at the other ones. So it seemed like you were headed that direction. But like, what makes a really good pitch? What makes a good entrepreneurial story?
Well, it was dead
Anyone
silence.
jump in?
Look, I think the first thing I look for is really authenticity and trying to understand the motivation of the founders as best I can. Why this problem of the millions of problems out there? Why did this team come together to address this issue? And I don't know the specific backgrounds of the two fellows from Ed Republic, but my guess is that they are in technology. They've been hiring managers. They've certainly been hired by many companies. They've got domain expertise. They understand that the hiring process is flawed, and that resonated for me.
Yeah. And for me, it's pretty simple. The first thing I do is try to get the story, and is it a big story in a big market? And then the second thing I try to do in my head is, well, what's the business model? How complicated will this be to build? And then what will it cost to market and sell? So the first thing is the story and how big a market, and then the second thing is business model and how much will it cost to do this, and how much will it cost to get distribution or sales traction?
I think for me, a lot of the best entrepreneurs we see are able to take an idea, a kernel of an idea, and then slowly go adjacency by adjacency and conquer a market. So I think looking for someone who is maniacally focused on doing whatever they're doing for any number of reasons. And I think secondly, there needs to be a why now story. Why is the market they're approaching? Why is there time? What underlying things are happening that's causing an opportunity for a company to emerge? Because people say big companies move slowly, but they have a lot of resources and they're good at what they do. So we're looking for, where's there a seam where there's opportunity for a startup?
So sticking on the theme of pitching, since we just heard 4 pitches, what is the best pitch you've heard this year? And then I'm going to follow up with what the worst is. So what's the best pitch you heard, and why did it resonate?
In 2015 or
2015, so recent, last 2 to 3 months, yeah.
Probably in the last couple of months, we heard a fantastic pitch from a local deal in the security space that has potential to be a fantastic company, and they knew their market very well. They knew the competition very well, and with their early adopter customers, they were very succinct about what was working and what the challenges were, but it was really a crisp story, big market, and the early customer feedback was just spot on where they were, why it would be a good opportunity, but also where they were and what were the things they needed to do. And it was a company called Tempered Networks, but a super interesting deal.
Yeah, is that the F5 lineage company?
Yeah.
Okay, yeah, one of the co-founders of F5. I've written about them, sure. Bill, how about you? Best pitch you've heard and why?
Well, the best pitch I've heard, and I'm a partner with DFJ, so we have a major presence in the Valley, so we see a lot of things out of there, but it's a small team. It's still an undisclosed investment, but they came to us with a design for a fully autonomous vehicle that's just like wild. It's crazy. And when this gets out, their thought is that it will obliterate Uber, because you will have little Uber cabs like we've seen in Total Recall, or these little things going around from place to place to pick people up and drop them off. It's a crazy idea, but it's really exciting.
That sounds like a big idea.
Yes.
And so you're going to do what Uber's doing in the taxi
industry.
Okay, interesting. Yeah. All right, Jason Stoffer of Maveron, what's the best pitch you've heard in the last couple months?
I think pitching a business well is becoming almost a commodity to raising money. So I think, we're looking to meet people over multiple months and understand, does the pitch turn into reality or not? That said, I think if I were to flash forward over the past year, one of the best pitches we heard was a business which Coastal ended up funding called Think. It was a neuroscientist from MIT, and you put this this sticker essentially on your head, and it was able to, with your iPhone, you could send waves to your brain which stimulated, which were able to cause the same effects as either using alcohol or caffeine. It was wild.
Wow.
Good that
sounds,
yeah.
Say
And
caffeine,
even
alcohol.
Yeah, even
that sounds like it
crazier.
could be the worst pitch too.
Even crazier, you press a button and you see a lightning flash, which
Wow. All right, before we get to worst pitch, I remember I am taking questions via Twitter, so just if you have a question for the panel here, just tweet at me, GW Startup Day, and I'll take a look and I'll try to incorporate that in. But worst pitch, what was a real miss, a real stinker, and why?
There was one in our Palo Alto office we listened to that was a blockchain play, and they were going to use the Bitcoin blockchain to secure business transactions in large enterprises, and I had no idea what the guy was talking about. I kind of understand BitChain and or Bitcoin and blockchain, but just the basic questions that an enterprise would ask before they would potentially even think about something like that, this entrepreneur hadn't thought about. But it was a great session for me because what I understood was I didn't know nearly as much about blockchain and what its potential was, but he didn't do a very good job of describing why it mattered. And so it was just kind of a hot mess of a presentation, I guess.
Not what you want to hear, a hot mess.
And I'll just follow up on that because there's so many bad pitches that it's hard to pick one. But no, it takes courage to pitch, and I don't, not to demean anyone. It's really a hard thing to describe your business. But to John's point, I think entrepreneurs spend way too much time telling us what they do and not why it matters. Okay, you got to start out by saying, well, why? You talked about why is this a big market? Why its impact on the problem, and we got to get comfortable with that before we care about the small little bits and details of what you're doing. Why does it matter?
Okay, Jason, a terrible idea came in. Terrible pitch.
I think there's terrible pitches all the time. One thing that drives me crazy, it happened earlier today, is when you have an entrepreneur who says they don't want to tell you anything until you spend more time with them. So you spend an entire hour dancing around, you don't get a single number. I mean, you guys have seen this.
They didn't ask you to sign an NDA, did they?
No, I mean, what I'm looking for really is you're looking for quality of thought, because when you're investing in a Series A, there's often not much more beyond thought. So there's a big difference between the entrepreneur who won't say anything and the entrepreneur who you're getting 3 levels down. Like I saw a micro lending pitch recently, which was fantastic because you couldn't ask something that hadn't been thought about deeply over the past 12 months. And that's really what we're looking for.
Yeah. So we heard a little bit about some of the things that are exciting to you. I mean, everything from security software to autonomous vehicles. But I'm just curious, in 2015, what sectors, if any, are getting you really excited? I mean, there's a big range there, but what are you guys spending a particular amount of attention on right now?
There's probably a couple of categories that are real interesting. 3 that we're looking at, or I'm personally looking at, spending a fair amount of time. Just the whole area of security, I think, is one that is front and center in both businesses and individuals' minds. And we're just seeing so many examples of vulnerabilities and issues. And whether it's physical security or it's data security, there's just a great deal of opportunity for a new mousetrap to be invented. And if you follow the security industry, it continues to be a space that has a tremendous number of companies that succeed over time. So security is a really interesting area. The second area to me that is very interesting is the next generation of integration. And there was a fair amount of success in the 90s in the client server era with BEA systems, with IBM WebSphere, with a host of middleware solutions solutions. But now as we move to a hybrid model of cloud and on-prem, the whole world of how you create applications and how you integrate information needs to be rethought. And so the whole area of middleware and integration between the public and private cloud is quite interesting. And then thirdly, the whole area of the Internet of Things and the industrial internet, and what companies are doing to move forward to make every device that is mostly today an analog device in their organization outside of the data network, as they move those to IP addressable devices, those endpoints and devices need to be programmatic, they need to be managed, they need to be secured. So there's a fair amount of opportunity, we think, long term in the Internet of Things space.
So Jason, how about you? You're kind of on the other side of the spectrum, doing a lot more consumer-oriented stuff. So where are you seeing opportunities?
It's funny, John and I meet for lunch, and I don't understand 90% of what he works on. But I think for us, a couple areas is, one is the consumerization of healthcare. I think two major factors. If someone's diagnosed with a severe illness in their 20s and 30s, they're going to search the web and look for who's the biggest expert in the world and how do I fix this. Our parents and grandparents' generation would have just done what their doctor told them to do. Secondly, kind of with the proliferation of high deductible plans, people are forced to potentially pay for that ultrasound or pay for that procedure themselves, so they're shopping on price. So we're spending a bunch of time. We've done 3 healthcare investments, announced one of them over the past 18 months. Second area I spend a ton of time on is education. I mean, what's very clear is the value proposition of college just isn't there. I mean, Pacific Lutheran down the street charges $26,000 a year. I'm not from Seattle. Maybe it's a great school, but that's an expensive tuition. And on the back end, I don't know how it pays back. So we've spent a bunch of time backing businesses like General Assembly, which are essentially attempting to either replace or augment parts of the post-secondary system.
Bill, any other additions there?
It's always great to be third on this sort of thing. Where I like
can skip it. I got plenty of questions.
Well, no. But I want to frame 2 big drivers that we're excited about. John and I are fortunate enough to be investors and on the board of Chef, so we're seeing firsthand the transformation of really every single vertical sector in America to becoming software companies and cloud-based software companies. So this is in the early innings. It's we're in the bottom of the second or something like that. Long way to go, and to the extent that Seattle's the cloud capital of the world, that's a great trend to ride. And then we're excited just about mobility. There are going to be 5 billion additional humans getting access to the internet via mobile over the next decade, and that'll be nearly 3x what we have today. So that's a long-term trend. We're excited.
I just got an audience question that came in. This person wants to know, what is your opinion of bootstrapping entrepreneurs?
Oh, I love it. I mean, I think I have 2 seed investments I invested in years ago. One was called Course Hero, another was called Everlane. And those investors just skipped the Series A and the B entirely and just went right to a growth round because they took a couple $1,000,000 and turned it into a business. I think there's too much of a mentality around congratulating someone when they raise a round. I think the people I congratulate most are the people who are able to build a business in a sustainable way. I'm not saying that raising is often the right answer, but it's not always the right answer, and I think too many people think it is.
Yeah, it's a terrific question, and one of the things that I really look for in entrepreneurs is how successful have they been at not using a lot of money. And when we were looking at and talking with the Tempered Networks guys, it was so interesting to see that F5 Networks went public in 1999 and had raised a total of $12.5 million of capital. And now when prior to going public, and now as we're a number of our companies have been raising money, and as everybody knows, valuations in later stage rounds are high, is probably a charitable way to describe it. And one of the things we're talking with a lot of our companies about is, go look at the real successful IPOs of the last 5 or 6 years. And since I do mostly enterprise investing, that's what I look at, and that's what the cohort I'm talking to are enterprise companies. But if you look at Splunk, if you look at Tableau, if you look at Workday, if you look at ServiceNow, if you look at Palo Alto Networks, only one of those companies had raised more than $100 million when it went to IPO, but every single one of them had revenue well in excess of $100 million when they went public. And so those entrepreneurs, getting back to the bootstrap question, that really understand the value of capital and are just frugal about it and relentless about how they spend money, will end up usually building a much more valuable company than the entrepreneurs that want to raise a lot of money, particularly if you raise money in easy environments, and then because if you raise it, you spend it. And if the math is the math, the more you raise, the more the exit's got to be for the venture investor to make money. But the more money you raise, the more outcome there has to be for the team to make money, because at the end of the day, the investors are going to get their money. And the people that end up getting squeezed when you've raised too much money and the exit isn't what you hoped, it's the team and the founders that end up usually suffering. And unfortunately, too many companies don't realize that until the event is going to occur. So entrepreneurs that hold on to as much of their company as they possibly can and treat the money like it's their own, those are people that we love to back.
So Bill, how does an entrepreneur know when to bootstrap versus raise money? When is the
well, so
there?
when you say bootstrap, I don't know that in this day and age that it's possible, given the velocity of business and competition, to truly bootstrap a company from cash flow from month one. But fortunately, you've got micro VCs, you've got angel lists, you've got Kickstarter, you've got just angels galore now, which we didn't have 10, 15 years ago. So you're going to have to raise some amount of capital, in particular if you're doing anything related to the enterprise. And maybe in consumer, it's possible to get an app out for $50,000, $75,000, and it takes off and becomes Snapchat. But not on the enterprise side. You're going to have to raise something. So I would say, reasonably early, you want to get a qualified group of value add angels together and raise that first maybe $1.2 million or $1.5 million, and then a year in come to talk to folks like us.
So this builds off another audience question that kind of piggybacks on a question that I had. What's the best investment you ever made? And more importantly, what are the characteristics of the entrepreneur that made it a success? So what characteristics?
Well, to date, the best investment I've made was in something called Splunk.
Yeah.
And it's, we got in early, mid-2007 when they just had finished their they just had passed $1 million quarter. And at the time, it was a real competitive deal. We wildly overpaid. But the characteristics of that, it was obvious. It seemed obvious that it had the potential to be a big hit, because the use cases that the product was being used for were much broader than what the team had originally intended. So in other words, people were using the product for a wide range of scenarios that the team had never actually built the product for. And so it reminded me a lot of the early days when I was working at Microsoft, in the early days of Microsoft Excel. All this use would happen in an organization for all different types of purposes, and then by the time the CIO even knew that this thing Excel was being used in an organization, there was $300,000 or $400,000 worth of revenue you could get. And so Splunk was similar in that lots of use cases that weren't designed, but the characteristic, I think, of every great business is it has a great product or it has a great service. And in this instance, Splunk was just a great product that Eric and Rob had built, and they did a good early job of marketing it, but it was a great product that businesses of all sizes could use for multiple different purposes. But the other couple Saturdays ago, my wife had her tire kept losing air or whatever. At least that's what her indicator on her dash told her. So I took her car into Les Schwab in Bellevue, and it just blew my mind how good they were. From the first person you talked to through the person that evaluated it, he came back, they spent 45 minutes, they said there's no leak, it must be a sensor in the car, didn't charge me anything, and I walked out of there thinking every single pair of tires I buy for the rest of my life is going to be at Les Schwab. And
I've had the same experience there.
and so the product and the service is really what people are going to buy. And you want to have great marketing, you want to have great sales, but getting the product and service right as a starting point is job 1, 2, and 3.
So Jason, can you take that question and focus maybe a bit more on the characteristics of the entrepreneur? John did a good job of explaining how the product and service came together, but what about the characteristics of the entrepreneur that help make it a success in your mind?
Sure. I mean, my first board was Zulily, which was, hopefully the other boards turn out as well as that one did.
We'll talk about Daryl Adams and Mark Vaden.
I think, when you kind of look at, I think there's two things. One is when you kind of look at a bunch of the academic research around entrepreneurship, successful entrepreneurs who then start another company that's in a market that's similar to the one they started in the first place are more likely to achieve success. So these were, universally, Mark and Daryl were two of the best e-commerce entrepreneurs out there, and we spent a bunch of time hanging out with Mark, co-investing with him in our office, getting to know Daryl, and it was a no-brainer to write a check to these guys. They were going after private sale. Now, at the time, the space was incredibly crowded. Nothing was profitable, and what was unique there is, one, they found a seam, which was interesting in terms of going after moms, but more important, especially retail, and we look at a bunch of retail. Retail is about, getting the details right, and they just flat out executed the dozens of other competitors that were out there. And I think, what was amazing about those guys is they took this, they were able to seamlessly go from taking a macro 30,000 foot view of a market to diving into, I still remember Daryl one day said, the cash balance is down today, so there must be an issue shipping in the warehouse. It was like in the first couple weeks of the business. And you need an entrepreneur who can go from 50,000 feet to the cell of a spreadsheet.
So Bill, we've talked about this in the past, that you don't care so much about the idea or even the market so much, as long as it's a big market, but the most important thing for you that you're searching for around the Seattle area as you look for investments is good, solid teams. So what are the characteristics of those founders or entrepreneurs that you're looking for?
Yeah, well, so that's been the investment philosophy of DFJ for the last several decades now, is to identify visionary entrepreneurs who have revolutionary ideas around disrupting large-scale opportunities. So, we're the only investor who has backed Elon Musk's 3 public companies now, or soon-to-be public company, a third, Aaron Levy at Box. So we are really focused on trying to find extraordinary people who have somewhat crazy ideas on the surface, because that's where the big opportunities come from. They don't appear as billion-dollar companies when they're first described, because if they were, somebody else would have figured that out and have done it, right? So people.
So do they have to be a bit iconoclastic or offbeat or weird? What are the personality traits of those folks?
So I'll relate a story with Chef. We did the seed investment in Chef back in 2009, around 4 individuals who literally, when they described this, they said, that movie Terminator, right? And remember Skynet that controlled every single device on the world? Well, we want to build that. We want to build the software that controls every single device connected to the internet.
That excites VCs.
That's a crazy idea, right? But we said, all right, we'll give them a little money and see if we can make some progress against that.
So just shifting gears into kind of where we're at right now with the current climate. There's been this talk of whether we're in a bubble or not. John, you alluded to the fact that valuations are a bit frothy, which we are seeing across the market. Are you advising your startups at all right now to be a bit more conservative in their spending, hiring, and their approach? And how should startups that are just getting going think about perhaps a bust or a negative times coming?
I think, we're closer to the end of the cycle than the beginning. If we could call the cycle, we'd be at a hedge fund. We wouldn't be sitting up here, right? But whether it's 6 months or 3 years, it's getting frothy out there. So I mean, we're spending a bunch of time telling our portfolio companies to raise capital if you need it now. I mean, recently I've seen a number of Series A's where they're raising $5 million. It didn't even feel ready for a Series A, and you know, months later it's announced they raised 15 or 20. So I think, all that said, there is a bit of a bifurcation in terms of if a Series A is obvious, they raise way more than they should. If it's not that obvious, I mean, the velocity of Series A is getting done. I don't think the quantity is significantly higher. It's just when they're good, the amount they're raising and the valuations are significantly higher.
Yeah.
Bill or John, you want to talk about advising startups to be more conservative right now or not?
Not really. I mean, I worry more, and in a few companies that are growing fast, it just seems like we're spending way more money than we should. But I think that the trends that are happening in the shift in compute in the enterprise, and then all the disruptive businesses being created by software companies disrupting vertical industries, the trend looks inexorable, and the question will be, how many cycles are there up and down over this multi-year trend? But if you plot the trajectory of where it's going, it's going in a good place, and then hopefully we'll be we'll be good at some of these exiting at the right time. But the trend is quite positive, and then some companies will do better than others. And then the other thing is, I was in the venture, started in the venture industry in 2005, mid 2005, and so the first bad cycle I was part of was 2008, 2009, and that was tough. It was really brutal, but the thing that every day I wake up and say, man, I'm so blessed to get to do what I do, because I get to work with entrepreneurs, and it's the greatest thing in the world. If you lose your belief in capitalism for just a few minutes, just go work with people in this room and you'll feel good about life. And the thing that amazed me in 2009 was, as dark as it was, as difficult as it was, how quickly companies responded, and how they got their teams right-sized, they got their strategy right-sized, and then how many of those companies survived and went on to something good. And the human race has an unbelievable ability to adapt, and we are blessed to all work with one of the great industries, technology, that adapts as fast as anything. And so it'll be bloody, and then people will adapt, and then there'll be another bubble. And so hopefully we'll make some money in this bubble.
And I want to add one thought, that where we're at in the cycle really impacts more on growth stage companies, later stage companies that have high burn rates and are dependent on raising capital sometime in the next, say, 12 months. When we're investing in early stage companies, we do it with a mindset that we're going to be involved with these companies for 7 to 9 years. And as long as we can find the right entry point today, we're not really all that concerned about where we're at in the cycle, because we know that there will be at least one downturn and hopefully an upturn by the time we exit.
Yeah. So just finishing up here, let's talk just a little bit about the Seattle ecosystem. I don't want to dwell on it, but John, you've had some pointed comments in the past about how you think the entrepreneurial ecosystem here needs to have a little bit more urgency. People need to think with a little bit more speed and moving fast. And you feel that in Silicon Valley, where your neighbor is in the industry and they're gunning hard to beat you. So the other thing you've talked about is telling a story. This community needs to be better at telling stories around the startups that are here. So what needs to happen to make those things a reality in Seattle, potentially setting Seattle on a path for more success?
Well, as we've talked about, it's also we're not in a competition with the Valley. It's just that the Valley is the single greatest market in the world for technology companies, and it's a phenomenal place. How broad and deep the number of companies are, the amount of talent, and there's a virtuous cycle that happens in the Valley, is that because it's such it's almost like a one industry place called tech, and so you're just constantly surrounded by entrepreneurs. The husbands and wives all know what's happening with the VC landscape, with the exit landscape. If people aren't happy with the job they're in because it's not making sufficient progress, they move on quickly. There's a broad range of just incredibly talented and sophisticated and experienced investors. They've got a university there that I think is bar none the best in the world at producing talent for tech, called Stanford. And so it's a really unique place, but this is a really unique place as well. And increasingly the two ecosystems are becoming an extension of the other. You know, probably the advice we give the companies that we work with that are Seattle-based is that there's far more competition and there's far more ideas just like yours that are funded or are being funded than what you're aware of just in the Seattle marketplace. And so you've got to work and get plugged into the Valley and really understand what's happening there and how fast things are moving. The second thing is you have to be really aware of where are you in the stage of your company and hire the right kind of talent that has done it before. You know, there's the cohort of men and women that are really good at getting companies from 0 to 10 million in results. And then there seems to be another cohort that's really good at kind of getting from 10 to 100 million. And then there's the growth cohort that's really good at getting things out the door in public or to large exits north of 100 million. So it's really important that you be really plugged into what's happening in the Valley, because it does set the standard. It has the widest, broadest marketplace in the world for tech, and there's just an enormous number of companies there doing interesting things. And so you're competing against them, not competing just against the companies here. And the way to think about it is you can, I'm a big football fan and a Seahawk fan and a Husky fan, and you can go to a Husky fall practice and you can watch them practice and you can think, wow, these guys are pretty good. Well, then they play Arizona State and they get clocked. Well, you've got to be aware of how good the conference is that you're playing in, and you've got to recruit the talent to compete at an elite level. But mostly you just have to assume that somebody else is moving faster than you, and your entire company has to work that way.
Jason, how about you on the Seattle ecosystem?
So I think you hear. I mean, we have a bit of an inferiority complex vis-a-vis the Valley. I think in talking on the other side, I think the real big positive of the Seattle ecosystem is you could if you're a strong leader, you could recruit a loyal team that stays with you for an extended period of time. There's too many engineers down in the Valley who you get your 4 years in, you move on, or the company has a bad quarter or two and they move on to the next big, bright, shiny object. And I think in Seattle, you're able to build an enduring company over a long period of time. You see less flips here, and more people build big, enduring things like, a Zillow, a Tableau, a Zulily, a Contour, etc. I think, what I wish is that the executives from those mentioned companies, the senior team, and also their best product people and engineers wouldn't stick around for too long, and they'd spin out and start more things that the people on this stage can fund. Yeah. So I think let's not underestimate the quality of building these long, enduring teams that Seattle offers.
Yeah. Cool. Well, I think with that, we're gonna wrap up. I want to give a big shout out and thanks to John Connors of Ignition, Bill Bryant of DFJ, and Jason Stoffer of Maveron. Let's give them a big hand. Thanks, guys. Thanks.
Thanks, John.
Thank you.
Great to see you. Todd, thank you.
Fantastic.
See you.
Good job.
Thank you.